All right, well, after the Fed's dovish pivot, everyone is optimistic. At least it seems like that right now. But is there danger that lies ahead? Well, our next guest thinks that thanks to the move, the dollar may weaken and we may see higher commodity prices, including oil. Now, we're starting to see some of that play out a bit. We do see the dollar stabilizing here this morning. Oil prices, though, are off the lows. We have crude back above $73 a barrel. For more on this, we want to bring in Ben Emons. He's a NewEdge Wealth Senior Portfolio Manager. Ben, it's great to see you. So since the last time we spoke, we had this almost, I think it might be a little bit too early to say it's a total pivot, but signs that we could see the Fed pivot next year. How does that then factor into what you see gains looking like in 2024?
Good morning, Jen. And again, keep that enthusiasm, right? Because it's like this year that's starting to gear up for us. Huge year, right? So, I mean, it will be, because I think what Powell did last week was somewhat historic in a way. Like, you really moved ahead of what you are ultimately going to do if inflation goes your way. And so not having that inflation exactly in the path of the Fed just yet, but indicating you're willing to move on rates. Yeah, that does trigger this dollar move, for example, and that is a big deal, because if the dollar sets in motion a broader weakening trend, not only that the boats are in commodities lifted, but so will they be in emerging markets. And I think you're getting then this year where there's going to be relative performance again between the emerging markets potentially having potential to outperform the US. That's extraordinary, given that we're having the Magnificent Seven with all their enthusiasm driving the stock market this year higher, right? So when the magnificent soft landing priced in U.S. markets, that may be seeing that also in emerging markets next year.
Love the enthusiasm, Ben. Where do you think we're going to see rotations in some of that investor enthusiasm next year?
Yeah, I think starts here, Brad, with on the ground. As your colleague just did enthusiastically indicate, Russell 2000 is up and is really gaining some traction. So I think that's where the first rotation happens. In a way, if you think of Magnificent Seven, affecting productivity across the economy, small caps will start to benefit from that as well. But then I think it's the bigger picture of where the emerging markets ultimately play out. Those were markets where the central banks have tightened far more and far earlier than the Fed, and that's I think that additional sort of catalyst for upside there, because those central banks are already in an easing path as we speak. So I think that's where the bigger rotation takes place between U.S. and emerging markets.
Ben, when we talk a little bit more about emerging markets, I guess where specifically do you expect to see some of that strength?
I think it's two parts. I mean, on the one hand, it's the Latin American markets there, where monetary policy has been very restrictive, and actually still is. Inflation rates have come off really sharply. On the other hand, you have Asia, but that's Asia ex-China, because again, there too, the Chinese markets struggle despite all the efforts that the Chinese policymakers are making to try to keep the economy going. Let's not forget, by the way, the major liquidity injection that took place on Friday in China that is yet to be really reverberating through the Chinese markets. So I think the Asian markets are the other part of this emerging market story, where I think there's this opportunity. And it's no longer a reopening story. It's really about coming out of the pandemic and getting more normalized markets in terms of monetary policy affecting markets. Therefore, emerging markets have upside.
Ben, I love in your note, you say cash is in the trash here. Walk us through why cash in the in 2024.
Yeah, it feels like that anthem, right? Of you have this pivot party, so you throw your cash in the trash and you take your plates out for stocks and bonds. I think the idea here, Brad, is that we still have very high rates on T-bills as an example, right? And that will not change until the Fed actually cuts rates. So there's something about cash that still adds income to your portfolio, but then it does get different once the Fed does start lowering rates, and to an extent follows what the market is priced in. So I'd say the word trash is maybe somewhat exaggerated, but the idea of that we did put a lot of money into cash this year, as the money market funds indicate. Partly it's uncertainty, partly it's the higher rates, partly it's the belief that rates will stay much higher, and it seems that story has changed. So yeah, putting it in the quote-unquote trash and using it for different opportunities, I think that's the story next year.
Ben, what do you think is the biggest risk as we look ahead to the markets in 2024? Yes, there's a lot to be excited and optimistic about, especially when we talk about rate cuts and maybe even getting multiple ones of those here in 2024. But in terms of what investors should keep an eye on when it comes to maybe what they are not watching right now, some of those challenges, what would you say is the biggest risk in 2024?
I think the two risks developing. One, obviously, is our own U.S. political situation. I mean, we do have still challenges in the House and the Senate about getting Ukraine funding through and that sort of thing. And what that could result into is that the mandatory spending cut of 1% across the board really starts to take effect as of January. That will change then to some extent the impulse that the economy has had for fiscal spending this year. Obviously, we get our presidential election much later in the year that to the run-up, and that could cause a lot of, like, I guess, trepidation and uncertainty among people. But the other angle here is the geopolitical angle, and we cannot forget what's happening currently in the Suez Canal. And these attacks that are happening, that's all indirectly related to what Iran's role is in the war in Gaza. So how that will play out is unknown, right? One thing about this glowing story I've been talking about that could derail to the extent is that we do get an energy price shock driven by developments that we're seeing currently. So I think keep that in the back of the mind in terms of what could happen next year, because it's not indeed, of course, all glowing story. There's always a risk reward here, and I think that's one of those risks: the developments in the Middle East and what happens with our presidential election.
Ben Emons, NewEdge Wealth Senior Portfolio Manager. Ben, thanks for kicking off the trading session and the trading week with us.
Thank you, Brad. Jana, thank you very much for having me.
Good to see you.